Yeah, so folks, I'm going to mute everybody in a few minutes and I'll get into the presentation. So I just want to make sure everybody gets in. There's still people coming in. I'm still admitting people. So we'll just chat for a minute. So yeah, so the goal is here. And, you know, I don't know how many of you folks realize this, but my YouTube channel was non-existent 2 months ago. And we're probably going to hit 10,000 subscribers this week. There's a lot of stuff going on. Uh, I'm I'm considering doing what we're going to call WaveTech Tuesdays. That we're going to do a meeting every Tuesday. We'll record them. They're going to be educational. Everything that we're going to everything we're going to do as we go forward will be educational and trying to get you folks to understand. What I'm going to go through today is a really introductory, going through what the different models are, what this thing is meant to do, and all that kind of stuff. So, well, the point of the process. Hang on one second, please. Hello. No, no, it's not. Okay, thanks. Sorry, looks like I'm having a little bit of an issue on YouTube sound. Those folks on YouTube, would you give me a shout out and let me know what the sound sounds like? Is it loud enough? I just got a call in that says it's not real loud. So we'll get all this organized here, folks. Just get another minute. Yeah, we still got some latecomers coming, so we'll just keep chatting for just a minute. Okay, I'm getting sounds good. Everything's good. Awesome. Just got to look at one last setting here, folks. Just make sure we got this on my OBS settings. I just want to make sure we get this cranked up. Okay. And just so everybody knows, just some house cleaning before we start here, is any of the questions and the open comments and stuff are on YouTube because I am the background is coming in as well. I can shut that off if anybody on the Zoom wants to raise their hand and say, hey, but your comments will be there. So just know they're public comments, okay? The other thing, just make sure that if you've got any type of background noise or anything, I'm going to mute everybody here in a minute on Zoom, and then I'm going to go through a presentation, just the old story of tell them what you're going to tell them, and then tell them, and then we'll talk about it afterwards. So I'm going to do a presentation, walk you through the entire WaveTech tool, which I'm bringing up on the screen now for you, and the plan will be for me to make a presentation. I'm going to walk you through a lot of details, and we're just going to open up for comments and see exactly what kind of stuff you guys are having, issues, understanding. We've had a ton of emails. I used to have an email box that I used, and it blew up. The info at Kendall Report is impossible to keep up with right now. It's taken 3 of us to keep up with that. So it's one of those things. That's how it goes. So anyway, okay. So I wish I'd have set this. And next, I believe we are, folks. By the way, we're going to do a meeting like this every week. I think next Tuesday. I think Tuesdays. I've got some things I've got to look into, but we'll announce it. Those of you who've signed out, give us your email information on the Kindle report. Then we'll be going through that stuff and just keeping you up to speed on anything that goes. And we are working on some other content as well. Okay, so we'll let you know as everything comes. We're learning this as we go. So let's just want to welcome everyone. We got quite a few folks over on YouTube as well, and a Zoom meeting. I'm trying to keep this window open in case there's, for some reason, it's set so I have to I have to let people in the room. So everybody's muted, so we'll unmute this later. I don't believe I can hear anybody. If somebody wants to say something, I should not be able to hear you. It looks like everybody's muted. So, what we can do, if when we get into Q&A, we'll try to bring a person in at a time. It's nice to be able to have one-on-one interaction with everybody. So welcome to the WaveTech tool. And one of the things that we did, this software you're looking at was built in, last time there's been any material changes was in 2002. You can remember that date. That was 18 years ago. So we looked at how we were going to get initially signals on a very, the best way, in a reasonable price way. This thing was, we still use this engine to run some quant stuff that we do in the background. And it's very powerful. It's the same basic engine, the decision engine, everything that goes into our higher end product, Portfolio Expert. But it gives you the ability to see some transparency. Now, I'm going to go to the home page here and just the quotes on this page are broken. We're working on how to fix this stuff. This is, we thought we were going to be able to get it fixed, but the IT guys are working on this, so hopefully the quotes will be back in and all that stuff. But the main couple things that I want to bring you into and understand what the software is designed to do is the chart. This is not TOS. It's not TrendView. It's not a piece of software that you can put in indicate all different kind of indicators. It's hard coded. Everything's hard coded. The only thing that's on there when we look at some of the individual stocks, you're going to see the PPMs that I talk about on the channel all the time. You're going to see all those things, and you're going to see all of the all the metrics that are back there, but the charts themselves are fixed, and they're everything in this thing is old as far as the HTML displays. It's not mobile friendly. It will work on an iPad really well, but it won't work on an iPhone. You can use it, but you got to scroll around. It doesn't scale. It's not a scalable environment. It's an old, probably HTML3 or something. But everything that's in here, there's a lot of details here, and I want to walk you through things I want to achieve today is for you to understand how to get through that, walk through. I know the videos that I did, somebody made a comment that one of the videos were linked to the same one so we're looking at that as far as that goes, but we should be able to get all this stuff fixed. So we launched last Thursday. We had a crazy weekend. We have clients all over the planet right now. You can just about name the country, and we've brought in a lot of clients. So we're going to be working. There's a number of things I'm going to be doing, and I'll cover that when we get into Q&A and some other areas there. But the platform itself is all quantitative based. I'm going to bring this chart up right here. This is an overview of the database that shows you exactly what the percentage of longs, and this is actually illustrating exactly how it flows. The black line on the chart above is the S&P 500. This is the percent long, and you can see that oftentimes what happens, and in this case, our database peaked in January of 2020, and we started to see this thing drop off really quick as this V started to, the bottom part of the V started to form. So we were already selling January 21st through February 21st, we were seeing mass exits in our database. And what you folks see from the channel, this is the stuff that drives my commentary. This is the stuff that drives everything I do, period, is the rotation in database. Most people are looking at indexes and drawing trend lines and that stuff. I'm looking at a large rotation of basically 17,000 symbols and getting, and you know, and what I'm doing is I'm getting a viewpoint of thousands of symbols versus looking at an S&P index that's being driven by 20 or 30 stocks. That's a much different view than I think you're going to see anywhere else. I don't know of anyone else that has programmed it, an entire universe of 17,000 symbols to think and act and understand under a criteria which I developed. And so just to give you a little background on this thing, I'm going to go through. I plan this meeting, if you want to hang out, for probably going to take me an hour and a half to get through a lot of stuff, because this is a real introductory meeting. The brief videos that I did were just to get you going, and so this is really bringing it in to perspective. But but this database is what drives my commentary. It drives my opinions that I'm going to have about the markets. I don't really get into a lot of predictions. I am a trend follower. I'm an Elliott-tician, and WaveTech is actually a combination of using PPMs, moving averages, and Elliott wave to make analysis. So inside the software, there's actually about 600 rules, and there's about 60 rules and 600 variables that it looks at. And this is an end-of-day process. You can, if you have TradeStation, if we get the models out there eventually, then you can actually you'll be able to use the models even on a 1 minute graph if you want. And so there's a lot of things you can do. But for the purpose of WaveTech, what we've done, it's end of day. So right now, we're looking at about roughly in the next hour, so I need to get through some. The good news is we're not running any, we're not going to go through any portfolios that we built today, but we are, so this won't interrupt us because our servers update every day and finish around 8 o'clock Eastern time, US. That's when they update. After that, everything's refreshed, any model buys, and I'm going to show you here in a few minutes on how to find new ideas every day out of the software, because we're constantly searching and modeling these 16,000 stocks on a short-term basis and an intermediate term basis as well. And so the intermediates give signals on Monday only. The dailies can give a signal any day of the week. So there's some dynamics that happen. But this is the overview of the database that we have. And I'm going to do a walkthrough, and then I'm going to come back to these individual links. And I showed some of these in the nightly videos. We can see that we saw 67 new buys, 22 right here on this daily. On this daily 1.2, you can see what the output of each one is, and I'll show you that in a minute. But I just want you to understand the components on this page. This is actually the S&P. You can click on this, it will update, it'll bring in a bigger picture of that. So let's take a look and let's go over, let's start digging in a little bit into research. And I think what I might do on some of these sections, this is the first time we've done one of these, is I think I'm going to go through the basic research, and maybe I'll open up for some questions just about each sections. Maybe we'll do that, and we'll field maybe 5 or 6 questions on this, and then just so we can bring in case there's some confusion in the way I presented something, and just so we don't leave you hanging for another half hour before you can ask a question about that. I think that'll be a good way to do this. So, but the database itself has a lot of rotation that's going on. And one of the things that we've seen on the intermediate level, if you remember on Sunday night's video, I talked about there were 800 trades that came out. I'm going to show you where you find those, but we did substantial amount of buying on the open on Monday morning, which ended up to be really, really a good point to buy. But those trades that come in, any of these trades that you see on the normal weekly searches, you'll see the button up here where the weekly searches are. Let me draw some things here just so make sure we all know where I'm at. So this button right here where it says weekly searches, that looks at all of the weekly models, so intermediate models. They typically hold anywhere from, I think on average, about 200 to 250 trading days. So 1 year is a typical pattern. So when we start seeing these plus buttons come in, which means there's an open position, all of these are on individual sectors, and I'll show you how to drill down in the database. And some of the things you're going to see, folks, and we're working on cleaning everything we can, is like I said, I dusted this off. We did add some new icons and a few things. We kind of dressed it a little bit just so it would be slightly modern, but there's a lot of elements in here that are just old school. This is almost like a Craigslist. It's old and it's hyperlinked and all that stuff. It's not other stuff. Maybe at the end of the meeting I can show you what the expert product looks like. But all of these things, what we see here, I'm going to draw. It gives us, once there's a signal on any of these, you're going to see over in this area here what the returns are based on their holding. But this is one of the maps that I want to start to make sure you understand what's going on. I'm going to draw a box around this. You're going to see that here, this signal on basic materials, it says it's 6 of 164. And what that means is it holds up the average number of trading days that it stays long is 164. On capital goods is 221. This one here on conglomerates 427. So it gives you an expectation of what's likely to happen. And the important thing to understand about what we're doing, what we're supplying, information we're giving to you on all levels, both short-term and intermediate levels, is the ability to build an expectation in a trade. So I used to teach a course that I went around and did conference rooms and all that stuff many years ago. What I talked about is how to become a really high percentage trader or make better choices. And one of the things that you have to have is you have to have an entry point, you have to have an objective where you think it's going to go, and you need to know how much you're likely to lose on any trade. Well, this thing is completely mapped out in that exact criteria. So you're going to see, I'll show you in a minute under a trade profile how to find all those elements. But each and every symbol in our database is mapped out like this, and it's mapped out on a short-term basis and a long-term basis, so you can see exactly what's going on. So I'm just going to bring in, let's grab this. So what we're going to do is we're going to grab, take a look at some of these elements that are out there. Now we're going to look at this T button here, and this is bringing you into this concept that I just talked about. This is like, you folks have seen the market map for the prices on the days. If you watch that, I post them on the channel every night. Like I said, I'm trying to figure out how to get a much more efficient delivery, and we're getting closer. It's going to take a little bit longer, but we're getting closer to getting something that's available. But this is that 6 of 164. It tells us everything about this symbol and about this model, how it does. Now this is on an index level. we'll get into some individual stocks here in a minute. But so what we're seeing here is it tells us what our maximum duration is. It tells us a little bit about everything. This is the other thing. Right now it shows that 164 days is 12/31. This file will be updated here in the next couple of days. There's some elements here because it hasn't been as actively used. This product that will bring into full perspective, and it will give you the exact holding date. It tells you what it's likely to make. So in this one, projected profit is 13%. It gives you a price of the objective. This is what I was talking about just a minute ago. When you're looking at a trade, you need to have a price objective. It's got and the average loss is 5%. The average gain on this is the index. This is one of our indexes, and all of our indexes are unweighted indexes. So they're price weighted, not cap weighted like a typical index is. So all of these we can drill down. We can click on basic materials. We just start randomly, and then it breaks it down by chemical manufacturing, all the different elements of each one of the sectors, and we can continue to drill down. So if we want to go into, let's pick this chemical and plastics, and now it brings us down to individual stocks, and these are still on intermediate level. We're going to go to a short-term level in a minute, but these are intermediate stocks. When they were bought, everything that was on that indicator a minute ago is the same thing. So I can go and grab this Eastern Chemical Company, bring up this profile, and you're going to see a profile of everything that it's going to tell you what the holding period is. The average return is 37. It shows you right now it's at 13. It is at the moment only 25 days into its average holding of 297 days. Now, when you're looking at these intermediate trades, I know a lot of folks that are watching the channel are day traders, they're short-term traders. These are the intermediate longer-term signals, and that's why when the orders came out on Monday on the channel, I said these are going to be, because we are on a downtick, we were going to get some great pricing yesterday when the market opened so much lower. So we're able to get some really good prints on the open yesterday. Whether that doesn't mean there's not risk in that trade over a 200-day period moving average. Just nice to get a downtick. So the order was generated on Friday at a price, and we get a downtick on Monday. It's a bonus. And anytime, I always tell everybody who's been our customers for years, when you see that downtick on Monday, smile and take it. Don't worry about, we just bought it and it's down. That's a good thing. We want to buy cheap, right? Buy lower. So all of these profiles, everything, standard the mean is 37, a standard deviation is 83. The average loss on this trade is 1164. And in just a minute, this is another element of the mapping and understanding the decision process that WaveTech is delivering to you, is about the understanding what's called the ER ratio, and we're going to dig into that in just a few minutes. We're going to do that as we dig into some individual stocks like we're looking at now. But the bottom line is it makes 37, and it's got a 11.6, and so it's a pretty good, it's a good ratio. It's a 3-to-1 ratio on what we average risk to what we made. We're going to dig into the actual stats on the trading system in a minute. And my goal is, while I'm going through all of this stuff right now, is I want to go through, and I'll open up for some questions right after I finish this section here. But what I want to make sure that we're doing here is that you understand the intermediate map and the short-term map and what these things mean. And then I'm also going to talk about the individual models. There's two models. There's a 1.2 and 3.2. And it's interesting because those numbers came around in 1992 when we were originally developing the core logic on this stuff. That was our working. That's just the names we gave them. We weren't very creative with those. And there actually was 1.1 through 1.4, and there was a spectrum on some of them had multiple iterations, and we finally made choices on which models we were going to walk forward. There's so much. That's why I'm actually want to start doing these things. There's so much that's going to come out of this background and understanding. And those of you just signed up, I just to tell you, hang around for this next few months so you can get a really good handle on this, because I think there's going to be some pretty good money made. There's going to be some great money made based upon when these short-term signals start to roll out. And they haven't done that yet. They're probably, we're getting close to that happening. So I'm just going to go over, before we go into individual symbols, up at the top here, I just clicked on the daily searches up here. And I just want to draw this in so make sure that everybody sees exactly where I am here. So this button right here says daily searches. That's where you click, and now the database looks completely different. The other one was 39% long. This one here is 79% long. There's 13,000 symbols that have long positions right now. And what that tells us is that there are 13,218 symbols that are in a trend mode on a short-term basis. And everything that we're looking at here, we're going to go into the individual symbols here in a minute, but everything that we look at is actually looking at this map, looking at the trending, looking at all the rules I talked about a few minutes ago, and monitoring each one of the positions. So tying things together, because you folks are been watching my channel, when I talk about a trade like in the S&P, we've had a trade long since the last trade was 28.40 long. That trade still holds, and you have to be patient and disciplined enough to wait for that signal to come out to get out. Now, everything wanted me to sell that thing the other day after Thursday's sell-off, and it just felt like, boy, this thing's rolling over. I talked about it on, on the channel, and what happened? Market rebounded. We opened terribly yesterday morning. We know the rest. We won't get into any market talk today, but obviously the market reversed, went up, and it saved the trade. So if you'd have got out on a terrible Thursday or on Friday, you would have been doing the wrong thing. And that's why when you learn how to use these models, it's going to help guide your trades. And most of the daily trades that we have here, I'm going to show you a map here as we go through this stuff. There's just a ton of information here. I'm going to show you the map of what's going on as far as the models go. But these 13,000 models, I thought we were going to get blown up after, especially Sunday night's activity and coming in as weak as we did on Monday, yesterday. We were really looking at, some pretty ugly scene. But by the end of the day, all of those stocks, all of those indices, everything that looked like was going to blow up and we're going to get short-term exits, all reversed and everything held in there. So the models work on an end-of-day basis. They're going to look at that close for Monday. Friday's close, we were still long. Monday's close, we're still long. Today's close, we're still going to be long. Okay, those trades continue to evolve based on what we saw out of the markets today. And that's the difference between being somewhat subjective and trying to pick high prices and stuff like that. I didn't have this tool out to you folks yet. We've been working on this for weeks, and it's it was somewhat complicated to get it to this level, and so far the stresses on the servers haven't been terrible. So. But anyway, all these numbers here are the same thing. So just like in all of these sectors, there's only one sector right here, this consumer non-cyclical and basic materials on a short-term level have kicked out. So we were 12 of 12. You see, I got a lot of lines. Let me clear this. Well, you see here, sectors, there's 12 sectors. There's now 10 long. It was 12 out of 12. And then the same thing here with groups. There are 102 groups total. There's 75 long, and you're going to see these numbers will match pretty close. apologize for that bell. I'm sure everybody heard that. Um, that was, yeah. So anyway, what we're looking at here is on this box is these percentages are going to change every day. The models are going to run. We might get lucky by the time we finish this. They may be run and updated. But the 79.47 is what's long. But just like in the other one, here, this model bought on 521 on capital goods. It's got 11% gain. And this is the key. I'm going to draw a box around this area right here. This shows us how many days it's been currently long and how many days it's expected to hold. Now, it doesn't mean that on 30, like on this one here, that's 17 out of 34, doesn't mean that when it gets 34, it's just going to exit. It's going to continue to model and ask the question. So what the models do every day is they look at the data that comes in, they look at all the criteria and say, are these criteria still positive? And if it says yes, it's going to stay and it's going to look at the next bar. So when we're looking at intermediate, it looks at weekly bars. We look at this stuff, it looks at daily bars and making decisions. Now you'll find there's a number of things that we'll go through here in a minute. But this is all the holding periods, all of the maps that I talked about earlier. Same thing as I'm just going to drill down. Let's go down to technology. Just grab a random segment here. Now when we go to technology, we got computer hardware, all the different subgroups, and you can see the returns. This is a good example actually. This one here, computer hardware, was bought on March 27th, so 4 days from the low. We got a buy in computer hardware. It's up 25% on an index, and it's 55 days of 29. So this shows you exactly what I was talking about. The fact that it average holds 29 days doesn't mean it's going to exit there as long as this trend is in place. Now these TCQWR numbers, if I click on this button here, it's going to bring up a chart so I can see. I just want to point out where my cursor is here. That's where we bought this, and that thing is still trending up. It's not, doesn't take a rocket scientist, doesn't take Elon Musk to figure that out. We're still in an uptrend. Moving averages are going. Let me bring you can see the PPMs down below. PPMs are also positive, and everything's exactly as it should be in a trend like this. And this is on an index level, okay? So we're gonna go ahead and just grab this one, computer hardware, and we're gonna drill down. And as we drill into this, now we've got Apple. You can see I bought Apple on a daily basis on 327, 252, current price 342. This was yesterday's closing price, not today's, and shows a 35% gain. Also shows you the same thing I talked about. And we'll take a look at and I'm going to go from this analysis here to individual stocks, and then I'm going to go and kind of unpack what 1, 2, 3, 2 models are. And then I think I'm going to go to questions, just see how much confusion I've thrown into you with my rant here. So here we go. So we have on Apple, it's 55 of 35. So it's normally 35 days as the average trade. These shorter term trades on when you're into the daily mode are going to give you much shorter trends. And some of these, like it looks like Digi International, it has been long for 33 days and it's down 5.8%. No money there. Apple was one of the big winners. Here's another one. Toshiba was a big winner. And most of these ones that came in early, some of these may have been in and out since the bottom. And we haven't looked at, and that's why we're going to drill in a minute, and we're going to go through an individual stock. So let's just pick on Apple. Everybody knows it. So we have two things. We can put Apple in this window over here where it says enter your symbol, or we can put or we can just go over here to where Apple is, and we can click on the R button. Okay, so here we are, Apple. This similar buy, we bought it. Did go a couple days against us and rocketed up. Okay, one of the things that I'm gonna break down and show you some other elements here because this trade, as you might expect, has actually exceeded just about everything. And now we're starting to get a little top here. You look at the PPMs, they haven't rolled over. PPM 3 is still pretty as positive at 0.04. Remember on PPMs, 0.25 or better is a trend. We're looking at 0.05 and it's flattened out on PPM 2. PPM 1 is actually at 0.05 as well. So we still, there's a couple things that this is going to show you just by going into the research area. And there's a lot of information here. It's going to tell you about the trade. So if you did the trade, you're probably not too worried about, giving back this trade at this point on this particular symbol. But you start to look at, there's a number of things on this. I'm highlighting over here on the right-hand side. There's a trend phase. It says trading model is currently long. What happens sometimes in a trade, this is going to be too much, but these phases will change within a trend. So we'll go through different phases. There's one phase that's extreme acceleration phase, and be cautious. Market could reverse. So we're giving you the basic conditions that are happening within the trend itself. It tries to talk to you at some level to let you know what's going on within the trend. So, if you did come in here and you want to take profits on Apple up here, no one would argue that. What's going to happen here is, Apple maybe is going to stall. I don't know where we're at right now, but the support levels. I want you to see where support is. 335.26, 325.02, and 309. So it gives you some support levels. Let me highlight that so you make sure you see this over in the bottom on the right here. It gives you some support levels so you know where the support is in the trends. Now sometimes you'll bring up a symbol, there'll be no support, but there'll be resistance. And that typically has a lot to do with the direction of the trend. So if it's in a downtrend, WaveTech probably has no position, and therefore you have resistance overhead, and you see the downtrend happening. You look at the PPMs, they'll all be negative and so forth. So you've had a fair amount of exposure on the channel if you've been watching me for a while to what these things are and how they're working as far as all that stuff goes. So this is just the basic trend level. Now we have other elements here. When you're in a symbol over on the left-hand side, you can click on Model Results Overview. And this is going to show you, this is actually showing you the equity curve in Apple. So it's showing if you would have done, there's a lot of trades on this thing. It's got on the far right over here, if you look at the total net profit, 730%. And that goes back to probably 1984. This is a long, I'll show you the actual trade log here in just a second. But this is actually 730%. There's 239 trades. Winners are 41%. And I talk about this a lot, folks. If you see some guy out on the internet telling you that they've verified 80% accuracy, turn around and run. Okay? There's probably a hypester because no one can maintain that kind of accuracy. And if your system depends on an 80% accuracy to win, I was just telling somebody this earlier today, is you should take all your money, put it in a bag, and dump it in somewhere and burn it, because you're going to lose. If you have to be that accurate, it's just not going to work out. No one gets to do that. I traded on trading floors. I've worked at hedge funds. I've traded massive institutional money. No one wins like that. Okay? Just doesn't happen. And don't build expectations. That's uh, and this is the beauty of having a quant model, having a map, having every trade transparent. Okay, there's no BS in anything that you're seeing here. This is what it is, and this is important to understand. And I think, and I'm not going to be able to do this today because as I go through this, there's just so much I want you folks to at least hear and be able to go back and listen to this, and so that you can get some context of what's going on. But it's important that you understand that accuracy is an illusion. I got to put people have been around me have heard this forever. Accuracy is illusion. Okay, accuracy is not how you make money. How you make money is through the old. You have to remember, I'm an old guy, so the old Kenny Rogers Gambler song, "Know when to hold 'em, know when to fold 'em." It's the ratio of how well you do when you have a winner versus how you lose. Then your percent win matters. So, like you'll see on Apple on a daily, we've got the effectiveness ratio. Believe it or not, on Apple, this is a 101. So this is only good. There's some symbols you're going to go out there, they're going to have 3 and 400 ratios, which will tell you that the odds are stacked up for you. So this one's only 41% right. The average win is 17%. The average loss is 7. So the good news is the ratio is 2.4 to 1. So you have to be right at that 2 point. If you're 40% accurate, you got to make $2.50 roughly for every dollar you lose to be able to sustain a winning track record in something. There's no way you can do it any other way. Okay, you have to make more than when you lose. So trading, and it doesn't matter whether it's on a portfolio management level, it doesn't matter what level it's on, you have to understand this ratio. If you don't understand that ratio, and if one of the things I will compel everybody to do is that whatever trade you do is keep a log of every trade and find out your accuracy. Take a look at your trading. I know there's a lot of folks on this call right now that haven't really looked at their trading. They just go and they look at the account, oh, I made money. If you start looking at your decisions, and that's what this software is doing, it's looking at every decision that it is and scrutinizing everything. And that's why we built this ER ratio, so you can look at this top bar and know almost immediately whether this thing should be followed or not. And in another session, I'm going to show you folks, even if this is a poor to fair model, I'm going to show you in circumstances still how to use these models to make money off of them in certain circumstances. But that's for another day. But this ER ratio is important. It's important to understand that this percentage win versus loss. So if you keep a log and you look at your trades. So I'm going to rewind for a second. This is one of my classes I taught, and it's very quick, is you have to, when you do a trade setup, you look at a trade, you don't have WaveTech right now, we've already mapped it out for you. We're giving you a trade, we're telling you this is what you're likely to make, this is how long you're likely to hold it, and this is what your average risk is on this trade. Do you want to do it? That's what it's telling you. And then you make that decision. If you're doing discretionary trades and you're looking at charts and drawing trend lines, whatever it is, and you have to do the same thing. Okay, here's my setup. I'm going to buy here. Here's where I'm going to put my stop. And most people never really try to figure it. Some do. Where do I think it's going to go? And at the end of the day, when you get out of that trade, you'll find out you even got stopped out. You made a profit. How much of that profit that you originally designed were you able to capture? All of those things. That's what we're doing inside of our own system. This is how I've looked at the models. That's how I've looked at trading since the 1980s. This is, I did have an Apple II on my desk in 1980, but the computers were just coming in. The whole trading where we are today in 2020. I mean, I think I've been doing this for 41 years technically, and this is one of the most exciting times in investment history ever, I believe, just because of the tools being digitized. There's fractional shares coming out. I mean, I've got some amazing techniques that you folks are going to learn from hanging around me when we start getting into really building content about making money. Right now, my daily commentary is just that. I'm just talking about what's going on. Our institutional clients and people that watch this channel, we're trying to do is give a perspective of what's going on day to day. So that's the plan. I talk about the models. When start talking about software and process, this is what we're digging into. So you have to understand this percent win versus percent loss. And when you understand that, that brings in a perspective of your decision making. So if you have records, you can go through your P&Ls on your brokerage statement. But if you can go back and start doing that, and I also have always told folks, if you're using this tool, talk about, hey, this was set up. This is what WaveTech told me. This is what I did. How well did I follow it? And that's how you get to be good. I used to joke, I only make the same mistake 55 times. Okay, once I do it 55 times, I'm not going to make that anymore. Well, I've already made all these mistakes for you, and all you have to do now is understand the logic, how to make sure that you're picking good choices out of the database. There's 16,000 symbols. It doesn't work on every symbol. That's why we have the ER. That's why we have all of these metrics up there so you can see what's going on. Okay, sorry. I want you folks to get an earful of all this stuff. So down at the bottom here, we're also seeing something else. We're seeing the returns by year on all these trades. And these aren't great. You could have stuck your head in the sand and bought Apple and made more maybe, but this is from a trader's viewpoint. And this is not probably the only stock you're trading. So these are decent returns. This is okay. If I put Apple up here on an intermediate model, it'll be amazing. But what I'm trying to teach you today is what is on the screen, what the metrics are, all of that stuff. One last, down at the right-hand side here, I'll highlight this for a second, way in the corner on the right-hand side. This is the trade log, and I'm going to pop this up so you can see it. This is actually every trade since 1980. So this database goes back to January 2nd, 1980, or the first day that the stock traded. So you can see what I call the good, the bad, and ugly. Every trade on this short-term model, there's a lot of them. What did I say there was? 239 trades. Every trade. And one of the things that in future meetings that we'll go through is looking for consecutive winners and losers to bring up probabilities, especially on the short-term charts, and how to bring better probabilities into winning. Okay, so I just want to make sure I've dug through everything here. This is model trade profile. We already touched on that. But we'll take a look. This is that map. Since it's here, there's 3 things you can pick on. You can click on when you bring up the symbol results. You can bring up symbol, model, and trade profile. This trade profile I highlighted, it's that map I talked about, the holding period, the expected returns, the risk, all that kind of stuff. Okay. All right, let me, I think what I'm going to do here, see if I can get to a screen here. We'll get to a screen and see if I can. So here's what I've just done. If you have a question, you should have the ability to unmute yourself. And if you would unmute and ask a question and then remute, that would be awesome. Looks like Amy unmuted.
Yeah, I'm actually ATCJ on my wife's account, so I have a really deep Amy voice.
You really do.
Yeah. I kind of asked this question in the chat, but volume. So two things. I was messing up with this weekend and I went through the training videos and all that. Did you switch this up? Because there used to be a column for the position legend. And I clicked on the position legend and it showed all the dollar symbols. Essentially, these ones are new entries. And I don't see that now. Did you switch that up?
No, it shouldn't be. Where were you
Okay.
at? I,
Actually, I'm not sure, but I had it to a place where I was on a daily model
yeah,
and I went into a sector.
okay, I know what happened there. When we put some of the new icons on, you might have been on a review page that those icons weren't updated. So if you wouldn't mind, if that, because there were a ton of stuff in here that we had to fix.
Okay.
So if you see that page or something, would you email us if you run across that again? So
I will.
there are probably different icons with like check marks and stuff like that.
Right.
Yeah, yeah.
And then there was a whole column with the position legend. So I clicked on the position legend and it showed all the new buys, the new entries, kind of brought it to the top of the list. There was like 8 pages of new entries.
Yeah,
That's gone.
shouldn't be.
Okay, then maybe I'm in the wrong place because I don't
Not
know how to
sure.
manipulate it.
Let's see if, so yeah, so that's one thing, that's a good question.
I
Um,
think I think I know the answer because like I do it through going to home and then clicking daily like or weekly
yeah,
and
that's
then put
exactly, I was just gonna show that. I was just,
Okay.
yeah, right here, so like,
Oh, yeah.
yeah, if you go over here, then you're gonna see on the left-hand side, it's gonna show you all those trades.
Okay, perfect.
You see them?
So, yeah, that's exactly what I was doing. Then you can click on where it says X's above the X's, and then it'll come up with all the new entries.
Yeah, so like you can do this symbol, MP is
Yeah,
actually symbol market position, right?
perfect.
So if you click it, it'll sort by all the dollars. You can also go by trading system. This one in this case is just a D1.2, and then you can sort by symbols or even sectors. And some of this stuff is mapped and all that. And listen, while I've got everybody on here, I want to put this out here because it's important. Um, we have a pretty robust database. Like I said, there's 16,000 symbols, but if you do request, um, uh, you can request a symbol. We kind of scrutinize them because we don't want to put junk in like penny stocks, uh, things that just aren't going to get used. So we'll take a look at the review of symbols because I know there's just, with the amount of people that we're most likely going to end up bringing in on this platform. And the plan is, by the way, also is to rebuild this platform. I keep telling everybody, embrace this thing. We're going to work together. We're going to make a bunch of money, and tell your friends. We'll get a bunch of customers, and this money's going to be reinvested into this software and bringing this stuff out because this, yeah, there's going to be some really cool stuff that I can tell you that I've already got architecture. I'm the architect on all the software. I'm not the engineer or the guy that built it, not the coder. But all of this stuff has been my architect. Any more? Anything else?
I have, oh,
Go ahead. Someone else?
I have a question in continuation of this question. So like what I did, I used this and in order to put the symbols I want into the watch list, I copied this into the Excel.
Yeah.
And then through Excel, I actually did the sorting thing.
Yep.
And then the buy signals I add to the watch list. So this is the most simple way to do it. Am I correct?
I would agree with you on this product. Yes. On our other product, it's seamless. We can do a lot of stuff. But yeah, so this, yeah, that's exactly. And I do that a lot. You can download the report, and you can this case save it. But if you open it up, I'm on a browser, so it won't let me open automatically. But you can get the CSV, you can get that complete report, and you can do that. I'm going to go back to the home page for a minute because this actually is something I wanted to cover with you folks. This is how you're going to find daily ideas. There's two ways to do this, right? You can just click on these models, and the other thing that that we give you every day, you'll see over on the right this sentiment. What I look at is the ratio of buys versus sales. So like yesterday, there was more selling than buying, in spite of the higher opening. And I'm telling you, this database, I've watched every day of this database for 20 some odd years. Okay, and one of the things, I've got a really good feel for this, and you want to make sure that you um, understand that even though the market's going to go up, this short-term database is going to start to roll over, and you folks need to look at these sell signals really close. There's going to be opportunities maybe to buy puts on some of those. I'm going to go through. There's so much I'm going to teach you guys. Just hang in there. This is fun. I'm really having a lot of fun with this. And tomorrow we get to do a live cast. Just talking about markets. So it's I'm having a lot of fun. This is probably the best community that I've ever been involved with. So I appreciate everybody that's come on board here. I mean that, sincerely.
Hey, this is Jay. I have a follow-up question.
Yes, Jay.
Volume. So I clicked on that and I brought all the new buys to the top, and then I kind of sorted through them, and I know like there was no way to, like, I don't want to trade a trade that only has like 2,000 shares traded in a day.
Yeah.
So that's it. What about that?
That's a good question. Yeah. So this is exactly why I just mentioned the symbol request, and we have some stuff in there that is not real high volume, and we are actually reviewing the database right now for that standpoint. That at least you're going to know sometime here soon what the criteria is. Otherwise, you're going to know that all of these symbols have X volume on average, right? So you're gonna know at least that they have some minimum standard. And Jay and I were talking just the other day about defining some things, both for requests and actually going back in the database. Because in the past, we've actually been willing with our investment advisors to sometimes throw in some junk, and we're just going to stop that, and we're going to try to clean this thing so you don't have that concern. So unfortunately, you're going to have to go to probably a secondary website and look at that symbol and figure out what the average daily volume and turnover and all that stuff is. We don't have that. Unfortunately, we used to have a service on this thing, and there was a whole fundamental snapshot, and you could click on it and it would show you, 52-week high, low, all the stuff, right? But the service we used went away a long time ago, and so it hasn't been on there. But that was actually pretty handy just for that point.
I think in the continuation of this question also, I had the same problem. And if it will be possible, like I understand not like right away, but for the future purposes, it will be very useful to add an extra column on here with a volume feed. That will be like very useful, because I understand that right now we're in the stage where only like some low volume things are coming out on the radar, because the other are already bought. They're already in a database. And I remember on one of the videos or presentation or YouTubes, you were saying that we could not only buy the signals, we could also enter into the position which were recently entered. For example, like if it was entered like 5 out of 30 days, it could be still possible to enter. Can you give some more thoughts and expand a bit on this issue? How would you suggest to go around? Like where, like 1/3 of the time, like if it's in, it's still good to get in, or like, because I saw some, like I was going through some symbols, it says like in recommendation field, it says good time to buy, or like recommended to get in, and some it says not recommended to get in at this stage.
Right.
So if you could expand a bit on this idea.
I would tell you that new column probably won't show up in this software, but we are. This is what I told everybody, and I'm telling you folks again. We've got quite a few people over on YouTube as well. By coming into this environment is going to give me the ability to do some things, and the plan really is to build probably completely new web app that would do a lot everything you're talking about more. There's stuff on our other platform that we have, and then there's some things I would like to see as well. And I have always said, for folks that have hung around me and known me for a long time, is I think there might be. Let's take a look here. If we go up to feedback, you can actually. This would be really good, like a comment, request. Something that you want to do, like right here. Maybe submit those type of ideas to us so we can start to accumulate those. So anybody that has ideas and wants to watch this stuff, this is a good way to do it. And you know what I'm saying? Anything else?
So on my second question,
Yep.
can you please respond also, like, for example, if it's 17 days in out of 29, and it's an accumulating stage, and for example, like, I don't know, like I'm looking at capital goods right now, for example,
What,
and it says
what symbol?
CG. Oh no, it's not. Sorry. It's the market sectors. Um, for example, 10 out of 53. P, that's also the sector. Let me get in the sector. Accessories, for example. 5 out of 20, 26, for example. Delta DLTY, that's some fund, I guess. 5 out of 26 days it's been in. And new position, and it says in the trend phase, it says new position in this phase are highly discouraged. So like here it's clearly not good time to enter.
Right.
But in some cases it says like even though it's like been in for like 20 out of 25 days, it says good time to get in. So like what's better, to follow these recommendations of the trend phase, or to just make a judgment, since it's already been 20 out of 25 days, it's too late to get in and not get in?
Yeah, I was on with a one-on-one call with somebody this morning. They asked the same question and came up with a brilliant solution, which you'll love. Is it'd be nice just to be able to actually even sort by those criteria so you don't even see the other stuff, right? And
Yeah.
one of the things we'll go into the report builder in another video as well, as some of the stuff you can actually scrutinize, not a lot in so on the next level on our portfolio expert, we have an intense data mining tool which can go through the whole database looking for stuff. This one has one, and I don't think I'll touch on it today because it's complex to use, but we will get into that maybe next week and talk about that.
Okay.
Hey, Bob, I have a follow-up just on the previous question. Maybe you can just provide some clarity, and then I did have one other question if you can maybe walk us through.
Sure.
So I was curious about that. I was playing with the daily and the weeklies, the 3.2s, and I would put in a symbol, and just for example, under like a daily 3.2, it would say it was a recommended buy. It showed upswing for the next few days. But then if you put it into the weekly, it basically provided the feedback of discouraging the entry, saying it would not be a good time, potential top, with potential like reversal. So I guess if you could break down those time frames of how we should be looking
No,
at that.
that's really good, because what you figured out is, like, chances are if you looked at that intermediate or the weekly signal, it'd been in for a while, so it's up pretty high in the spectrum of its holding period, and maybe the momentum and things that are on that weekly are spiking. But the daily has recycled, so it probably in that same mode. If you're looking at weekly, what it most likely has done has gotten to where the short term is rotating. So you could trade off of the short term, but there might be more potential risks there from the standpoint of how, how the positioning's going, if that makes sense. So you've got a high risk on a trend that's extended on a weekly basis. So that means that we're probably looking at the short-term trade could be vulnerable as well, especially
Okay.
on a 3-2. I haven't done that yet. How are we doing on time? Let's see here. We got about another half hour that the plan is. So, but yeah, so the 3-2 has a tendency, and I mentioned this earlier, to have more ability which to handle more noise that the market's going to throw at it. It has more tolerance for volatility than 1-2. 1-2 would just get out and say, okay, forget it. I'd rather re-entry than hold this risk. And 3-2 goes, now I understand the risk because the underlying trend is so good. The longer underlying trend is good, so I'm okay with that. And you'll see sometimes in 3-2 you'll see some periods of time where you're thinking, why isn't this thing getting out? Okay.
Okay.
And then you go, then you find out like some days or weeks later, like, oh, I get it, you know. And there was a trade way back in 2009, and we had a big conference room, about 400 investment advisors in there at our annual conference, and everybody was asking me. EEM just kept staying long. We had rotated out. Actually, it was early 2010 when this meeting was happening, and everybody want to know, why aren't we selling EEM? Well, EEM had a whole nother rotation, and it had a whole nother rotation and did a whole nother level of returns before it got out. And then everybody went, oh, that was good. That we should have held it. And so it's interesting because once you, obviously this is my life. I live with these models and I developed them. So I understand those, and those are the type of things that you get, I guess, to a point of understanding exactly what's going on within those metrics, and it's just experience. It's like everybody. I tell everybody, I can give you all the knowledge I have, but I can't give you my experience, and so that's what I try to do my best on the channel, is bringing in that experience of watching these models and how they unfold. People talk about all the craziness with the Fed manipulating everything we got going around us. This isn't the first time that they've done this. It goes way back. So anyway, I hope that answer helped out a little bit.
I did. I did have one actual question that when you brought that up, that was something that I noticed when I was going through the software. I think what you said actually just a little while ago, you're here to help us, and this platform's here to help us make, pick stocks and make good choices, because that's how we're going to have the overall win-loss ratio that's going to be beneficial to us. I'm sure there's a lot of people that are much more experienced than I am, but would it be possible for you to just kind of maybe do a basic walkthrough for, basically the steps of how you would research something, and look at that stock, look at that opportunity, what you would kind of look at as a deciding factor, and then which would make you take an action, either putting that trade on or taking it off. I think for me, that's where I'm trying to really understand all the research and all the great tools that you're providing to us, but how do I really break them down to, understand how you're looking at it? Like you just said, you have the experience. I don't have that. I'm trying to simulate it really fast. But how would you go from just randomly looking at an item? It's almost like the airlines. Great trade. I did really well on those.
Yeah.
How would I go find that on my own and process everything that you would look at to then say, you know what, I'm going to put this trade on?
Yeah, that one was easy. Just wait for Warren Buffett to sell. Yeah, that one was easy. That's actually what motivated me to even look at them.
That's fair.
I wrote, I'm going to look at these. I'm like, wow, these things are bottoming. This guy just sold the whole, and so that's the other thing that you can do, actually. And I'm not sure if we're going to be able to do this justice. I would like to maybe talk about that a little bit and just try to get to something like I just brought up Delta, and this would be good. This is a daily, And this is a good example. I remember, I don't, this chart doesn't have the 200-day moving average on it, but we went right up to the 200-day where my cursor is here, right? And I just retraced back. But this is a 1.2 model. It hasn't sold the stock, and right now it's given back quite a bit, right? So what usually will happen is I call it, you get the echo bounce here, where it comes down. This is the 21 period moving average. If you look down here, ppm2 actually tracks to 21. You've got a 2%. See where it's number 2 on the scale?
Yes.
That's a 2.0. Right now, that support level is going to be, this is going to be this over here on the right is this 27. So you could literally put that's going to be your support level right now at that level. And you got to, that is tracking the ppm2 with a huge, there's like a 10% probability to get through that number right now. And,
Okay.
and one of these days, as we go through all this stuff, and I want to teach a lot about the PPMs, but the beauty of this, it already knows all this stuff. It's embedded into logic, so it knows that is a big support number, and the markets are going to have to convince this model to get out of this. What will be interesting to see where the peak is. This goes to what I was talking about trading a little bit ago, and this is where you're looking at what the trade profile is. I'm just going to pop that up on a floating screen here. And you'll see here, it's going to show us that it's exceeded, even at the level where it's at right now, it's exceeded all its normal trades on this model.
Okay.
Okay, but on this one, on the holding period, it's still accumulating. So theoretically, you could have scaled out of that, probably come back in on these support levels and bought this symbol back and let the model actually tell you how to get out of this one on the second trade. If you just got it looked obvious to me that almost every airline was going to run to the 200-day moving average from a technical viewpoint. A modeling viewpoint, you can see this model's still holding in on there. Now, one of the things we can do is also switch over to a D 3.2, and this is going to have you're going to see it came in that first trade that 1.2 got whipsawed on. This didn't happen. This actually bought at 20 around the same number as the second trade of 1.2. So this is something. Yeah, I almost want to spend like a whole section next time we all get together and just talking about trades like this when you see a stock get cratered out. And there's two ways to go. If you're really aggressive and you think there could be a V bottom in the stock, you want to put 1.2 on that stock, okay? And you go with that trade. And if it doesn't V bottom, you can see where a 3.2 usually will come in after all the noise and the pattern's bottomed out. This was a perfect trade, actually. Didn't buy the low, but it bought right at the right point where you would want to be buying. If I put 1.2 back up here real quick, what you'll see is there was a preliminary buy over here, then it sold the whole here. It did a Warren Buffett, and then it got back in. And the 3.2 got in, I think, a day or two before this. So the risk of cratered stock to put 1.2 on it, if it doesn't V bottom out, it does this, then you're going to have a trade. You're going to have a losing trade, then a winning trade. It'll usually play out like that. And that's considering there's enough in there. I don't know, like stocks that were bankrupt. I looked at Hertz. We didn't figure out the bankrupt trade on this one. We're not.
Bob, the screen you just brought in, we don't have this data yet. Am I correct?
Say that again, sir.
The screen you just brought in with some indicators, we don't have it yet. Am I correct?
No, everything you're seeing on screen is all yours. It's all there.
Can you show, like, when you was bringing the screen, you said I think it was trade profile?
Yeah.
Like when it was showing, like
Yeah, so we're talking about the trade profile here? Is that right?
Okay, that's T. Oh, okay, I see it now. Yeah.
Yeah, so you can click on the T button, and so you don't have to leave the page where you're at, and it will float a separate screen up, just so you can see
Okay, I
exactly
just
what.
mixed this trade profile with the what trade profile on the left. I could see
Yeah,
it.
that way you don't have to, like if I click over here, then I can't see this other stuff.
Yeah.
You see? There's some of it here. The trend phase is there. There's some things here, so you can get both sides of that.
And I also see that one other person is writing this question. Can you go over the difference between 1, 2, and 3, 2,
Yep.
or you will be different
Yeah,
presentation?
and I think we're going to finish on that, and I think that's a good place to go. Like I said, I, I, I love having, that's why I wanted to have the point where you folks could ask questions, so I could really embrace the community and the people that are using this. So uh, let's let's talk about that, and and what I was just covering is really what the question, what to answer your questions, and Delta is as good as anywhere to look at. So typically,
Bob, sorry,
yeah,
before, so is there a way also to put those definitions in somewhere on this website? So if anyone else comes and they have the same question, whether
yeah.
they use
So
models
here's the
name.
plan. I'm going to be doing more videos in that section where there's just 3 videos right now. I'm going to go through 1, 2, 3, 2. I'm gonna start doing it. I didn't know my life was going to be running around videos. It's kind of interesting. Um, but yeah, so I'm gonna expand that area there on Portfolio Experts website so that you can see that I'm going to address some of these issues. And like I said, just real quick, and I think this is the best place to tell you folks to do it, to go to the feedback button in WaveTech and just type in a note, you know, and let me know all those questions. Now, it could get overwhelming, but there'll be plenty that we can get some ideas on. Okay, and that will help a lot. So we're going to go back to the delta as a description. So the primary difference between 1, 2, and 3, 2 is that 1, 2 is the more aggressive model over 3, 2. And and I will tell you that the reason why 1, 2 exists is because one of the most personally frustrating trades I ever had in my life was missing the V bottom. What could typically, I'm just going to bring something up and draw. And this will tell you that in a more, I guess, a better explanation of what these two are. So, so when you have a market like declining like this, I'm just drawing on an open part on the screen here. There's 2 things that can happen. You get the classic right shoulder, right? Get a retracement, and then market goes up. This is what 3-2 knows everything about. That's how you saw when we put 3-2 on delta, it actually did exactly that. It was able to figure out that right shoulder and then where to come in at. The problem that I had, and we all have, is the V bottom. It just comes off the low and just goes straight up. And you're waiting for that right shoulder, you're waiting for that pullback to buy, and it never happens. I hate that trade. I hated it so much. I worked on how to overcome it in the modeling process. So 1, 2, that's why I'm saying in a cratered stock, if you think it's going to be a V bottom, you want to go with 1, 2 because it's going to be aggressively entering when the market is bottoming. So an example of all of a lot of the 1, 2 and all the stocks that rebounded off of the lows back in February, in March lows, they came in, like we looked at Apple, 325, 326, 327, 4 days off the lows. The models were buying this stuff on a short-term basis on 1.2. And the reason why that was happening is because it goes, whoa, this is that setup. This is the probability. It says this could be a V bottom. Well, it turns out that the entire market was a V bottom for the most part, right? So that was the opportunity there to be able to grab those. And so 3.2 actually has one filter. There's something you never see on the screen here. There is a ppm4 that exists, but I don't show it anywhere. I can put it up on TradeStation, but it is embedded in 3.2, which says, hey, before you buy, make sure that the longer term trend has bottomed, or before you sell, make sure the longer term trend has topped. And there's logic and criteria that flows around those ideas that are, there's a number of things and other elements. The ppms have something to do with the position of the market, has something to do with the angle of the attack of the pattern, all has something to do with it. So it's going to make those decisions based on that information. And 3.2 has that extra said, wait a minute, this is still a long-term trend, don't sell this yet until that longer-term trend shows, that underlying trend shows that it's failing. Like when you hear me say on the commentary, and I'm talking and going through my daily technical stuff, when I say there's an underlying bid in this market, it's because that element still exists out in the marketplace. And that's when you have a 3.2 model up, you automatically know that it's holding. You see 1.2 will exit, 1.2 will enter, 3.2 says no way. And we did actually a white paper, and I have this somewhere. I should dig it up. And as far as I know, it's still valid out there. That 3.2 has a tendency to be 3.2 has a tendency to be the best model overall. It has, if you only use 3.2, you do okay. But 1.2, like if you only use 3.2, you'd have been late to everything that just happened in the markets. So there are times where 1.2 makes a lot more sense from that standpoint.
Can I ask one more, couple of very simple questions which I have?
Sure.
I don't understand, and I've watched the videos a couple of times. What is the average drawdown percentage mean?
Okay. I don't think I covered that well in those videos. Hang on. So when you get over to Delta here, and we'll get into those model results. So average drawdown is the drawdown is any peak to valley in any trade that is going on. So like we just saw this big peak. You can see this is the equity curve for Delta. Look at this noise. Look at this crazy volatility just in the equity curve. And so what it's telling you is the average from the peak. You see, I'll put a cursor here. From this peak down to a low is 8%. Or when this peak happens down here, this decline or this drawdown is 8%. Okay, so it just gives you an idea from when the model's long and it's holding something, what it's likely, what it could retrace from the top before it returns back to the trend. And I just want you folks to know, I know I hear some dings, and that's obviously, I've got to get this screen set up just a little bit better here so I can see some of the chat on and questions on here. Anybody else have?
Hey, Bob, this is Sam. My question may look very preliminary. Let's say I want to trade on a symbol, let's say Delta Airlines. What are the things that I should look in the tool? Um, how do I make a decision buy, or sell?
Yeah, one of the cleanest ways to go is obviously catch a brand new signal, right? If you're coming in after a signal exists and you're trying to use the tool, at least uh, use the tool, then maybe you get a chance to use the exit signal to help you get out. Maybe you can use some of these support numbers. Do you have a symbol that you're watching?
Let's say Delta.
Okay, we'll just stick with Delta. Yeah, so that's what I was just talking about. That 27 number is a good one. Let me just see this 2720 down here. That's your support.
Okay.
And like I said, let's say you didn't own Delta at all right now, and you want to own Delta, right?
Hmm.
You could just come in here and buy Delta at current prices and let this model tell you when to sell Delta.
Okay.
Okay, that's one way to go. There's a couple things that are going on. If we go into the trade profile, I'll pop that up. You'll see that trade profile tells us we're only about roughly halfway through the average trade duration.
Hmm.
What's going to be interesting about this trade to watch is how well, where's it going to end up getting out at? We could see a whole nother rally and it could go to 45 and it holds it all the way to 45. There's no way to determine, what's going to, when that thing's going to exit ahead of time. I've been asked that over the last 20 years a few thousand times. Is there any way we can tell when it's going to buy? Well, when it tells you to buy, then buy. And when it tells you to sell, sell. And that's why I was talking about that S&P trade that I've talked about on the channel and all those type of things. Those are the type of things that we can literally map out, and so we can break down what the end result is going to be once the trade's over. And that's why this trade is interesting. Delta, and there's some others. I think Allegiant was like a double at one stage, and everything went to its 200-day pullback. Maybe we're going to go above it. Who knows? Is the market going to stall here? There's a whole lot of questions, and that's what I will go through tonight on tonight's video and studying everything based on, the best that I can do is I try to walk forward my analysis. Same thing here when you're looking at the chart. If I didn't own Delta, I'd be willing to buy it right in here as close as I can, to 28, 29, wherever
Hmm.
wherever it is, and use it and just let this model take me out. You know,
Gotcha.
uh,
Okay.
I don't know what that risk is right now, but I've told everybody over the years that have used this software that you want to use its guidance. If you came in later in the pattern, we're halfway through duration on the short-term trade, then you can use this thing, but don't ignore it. I had an old customer of mine used to say, I don't care if you do the buy signals, but never ignore the sell signals. So they're good, and that's how I would trade that. If I didn't have it, if I own it and I was happy owning it, one of the things I talked about a number of weeks ago when I recovered some of the airline stocks when they were up around the 200-day, I suggested even taking a partial profit and let's say that was a strategy that bought it on the original buy, it spiked up to close to 200. You took half your position off, and then when it comes down here and we're in support, we're halfway through the duration, you could put the other half back on with the idea that you would exit the entire position on the exit of 3-2.
Bob, I was actually just noticed that on Delta it says like in trend phase it says new position in this phase are highly discouraged, and in reversal patterns it say the model is currently long and new
Yeah,
positions are
and
highly recommended. Like how to interpret this?
yeah, and that's been those trend phases are pretty good. Sometimes they're good to use sometimes, but this is really that particular item is being generated, that message, since I wrote it. I actually wrote that message on an airplane from Phoenix to Miami about many years ago. And the concept was here is we just wanted to have, this is operating off ppm2 is telling you information. You see ppm2 is up at around 2%. And, and the only reason why that was discouraged is it was to be determined that this trade was starting to get overdone. So that's all that was. But when you look at the pattern,
The
and look at,
reversal is ppm3. It's based on ppm3, yeah?
ppm2 would be the current phase 3. That's based on the that's based on ppm2. Actually, that message is being driven. So it says if this value equals this, then print this message. So it's somewhat generic, but it does locate at times when those reversals do occur. It doesn't mean they will occur, but like I said, it's it's worth a shot. I'm looking at this thing. I'm looking at that that upswing and all these ppms and everything, and we may not make a new high on this trade. Okay, this delta may not make a new high. That 200-day might be exactly where it stops. That, but if I was looking to buy delta, I would at least have a sell discipline around that idea. Like, okay, I see this, I missed the initial move, it's pulled back to here. If I can buy 28, 29, I'll put that in, and I'm just going to let this thing take me out as a discipline to that. I would be okay with that trade. And if it leads us that delta is going to go to 45 or 50, I'm not saying it is, but if that's going to happen, then this model will lead you to that point. You will get to that point. Right now, there's a low probability of an exit to occur just based on where the PPMs are. But I guess that's the best way I can describe it. Just from if I wanted to own this thing here and I see a pullback and I'm halfway through duration, I'd be willing to do that trade.
So I understood it correctly. Reversal patterns are based off ppm3. That's the major thing, yeah?
ppm2. That's
PPM.
that's what's driving this particular message. Yeah. Yeah.
One more very simple question, like win-loss ratio. For example, on the ER ratio, you gave a very clear guidance, and you have this poor excellent thing meter. Can you give some suggestions on what do you believe is a good number for the win-loss ratio?
Yeah.
Based
So
on your experience.
yeah, that's the beauty of that ER ratio. It's already telling if an ER ratio of greater than 100 is typically what I've told everybody to use. I've seen people over the years build portfolios called 250 plus, so they won't even follow a symbol that doesn't have an ER greater than 250. So what you get from being in the system for a while is you'll start to see signals and watch things that you can follow. So you get a feel for that. You know what? Every trade I've done that's got a 150, 250 has been a good trade. Those are much better trades, and that's another way to go. And like I said, there's just so much to cover. This report builder, I'm just clicking on it. You can set up a lot of criteria. There's some basic criteria that you can set up. It's not as robust as it could be, but you've got certain elements here. Max days held, last close, current duration. So there are some things you can put in here that will, and they're drop down. So it's pretty basic, but you can, like win-loss ER ratio, you can click on some of these headers up here and start searching and changing this criteria down here as they show up. So that's another way to kind of get an idea of how to find some results like this particular. I don't know what's in this thing. but we can just look at, you can download them. You can look at results, and so you can just go through these and try to figure out these particular things only have one result. So, but you can play with this tool. I'll go through this more in the future, but you can change all this criteria and submit it, and it will. So I just kind of randomly did it, but I'll get this set up so that this will be a way for you to find ideas that are going to be useful.
In terms of the win-lose ratio, can you give any guidance or suggestions what you believe is a good win-loss ratio?
2 to 1 or better, typically.
Over 2.
Yeah, and then and that's why the error ratio is the best, because it tells you if you have 100. Let's say if you have a 40% accuracy, I mentioned this earlier. You're going to have that 2.5 ratio. You want to make sure that average trade is making $2.50. If you do that, you're going to have a better chance, because 2.5 times 40 gets you to 100, right? So that's a minimum. So the standard is 50%. I win 50% of the time. I got to make $2 for every dollar I lose. So on the 5 trades I win, I make $10. On the 5 trades I lose, I lose 5. I end up with $5 in my pocket, and that's basically it. So the better those ratios are, so you might even want to look at something. Maybe it's got a 3 to 1. There's 4 to 1s in there, and once you get to that, one of the things we can do. This is kind of interesting. Just thinking out loud here, is that we could actually generate a query that we could post somewhere, maybe in we could post in the content somewhere where we could give you like a weekly or something list of stocks that have certain criteria, because the portfolio expert tool is very, very capable of delivering a lot of metrics. And this was built, like I said, this 18-year-old product. Matter of fact, that basic process was built around 2000, so it's old. It works. The engine, the decision engine, and everything like that is the same as the one in the other platform. It's just the ability which to manipulate and pull more data out of is limited on this platform. So we're working on some ideas to expand accessibility, and as somebody asked earlier about building portfolios and stuff like that. We're just trying to figure out, because we kind of opened up Pandora's box, and so that's been okay.
And in terms of your experience, like, would you use for example, for Delta, the support level 1 or 2 for stop loss as well?
Yeah, you could do that.
What do you usually use, like support 1 or support 2? It depends on your aggressiveness.
Yeah, like, I'm just going to bring it back up here 1 second. Yeah, so it just depends on how much you're willing to risk. If you get a really good position in at 20, 29, 28, you probably go under 25 on this one. That would be a safe position. So it would be a stop at 25, or when 3-2 tells you to get out. So 3-2 might tell you to get out at $28. That trade's done. And then what you would wait for is for this thing to come back on another side.
So the support and resistance are different also for 1, 2, and 3-2?
No, it should be the same.
Okay, yeah, they have the same, yeah.
They should be the same. So this is, I've got 1, 2 up here. We'll go 3-2. Just verify that.
Yeah, the same.
Yeah, they should be the same. The only thing and some of these other messages, the trend phase and all of that, is going to be the same as well.
One
like
more
more
thing I saw when I was doing the monitoring on the weekend is some stocks they exit and the same, like for example they exited on 1206 when I was monitoring, like for example the stock Rex, it exited on 1206 and at the same day it gave a bot signal. How would you
Oh,
interpret that?
two different models.
No, the same model.
Yeah, probably you probably got an exit, and then it said to get back in, right?
Yeah, it was it exited on 1206, so it exited on June 12th,
Yeah,
and the same day it gave a buy signal.
yeah, for the next morning. My very favorite trade, believe it or not. Usually that second trade is so good because here's what happens. It's one of those trades where you sold out and then you realize you shouldn't have sold. That's what's happening. The logic, it got out, something happened, and then uh, that trade. Okay, let me rewind. The trade that told to sell on the 12th was generated on the 11th.
Okay,
Okay, the trade that said to buy the day after the 12th was generated because of what happened on the 12th. That
I
makes
got
sense?
it. I understand it definitely. Yeah, I understand
Yeah,
what
so
you
what happened was there must have been a reversal, something happened there. And so you got it. One of the hardest trades that I had to learn back in floor trading days is when you get it wrong and you get knocked out of a position, is we used to call it a gotcha trade. They got me. And then as soon as you realize it was a gotcha trade, what you have to do is come right back into that trade. And that's probably a 1-2 model, could be a 3-2, but typically it's a 1-2. It's just going to slam back in and say, whoa, wait, that thing reversed, get back in. And that second trade is usually a really good one. Sometimes you'll get a small loss, and then it comes back in.
And the weekly updates they run every Sunday, if I'm correct.
Every Friday night. So
Every Friday night.
yeah, we'll go here, and we're gonna quit soon here. We'll wind it down. But the for the weekly trades, Friday night is the big night. So when the servers run on Friday, it generates all the weekly trades for Monday's opening. That's why on Monday this last week we had all those buys stored up. And what happened was a lot of this momentum just surged up as the market went up, kicked into intermediate trends, and that was beautiful that it bottomed, that it came in so much lower yesterday, and then we see this continued bid in the markets today. So that was the perfect trade. And I mentioned that in commentary that, hey, we're going to get some great pricing on a lot of these trades that come in. Whether they end up working, whether they're good trades or bad trades, I don't know. But at least you're buying on the downtick, and that's the big thing. And so yeah, so you're going to see even on a weekly chart, you're going to see where it told you to buy or it told you to sell this Monday, and the following Monday it's going buy it back, and you're like, wait a minute, I just sold it. Those are typically the best trades out there. Don't ask me why. It's almost as if what happened typically is that there's been an event, a reversal, something changed in that stock to a degree that the model was stepping back in. It brought all the criteria back in. And here's the other thing. Everything I've talked to you folks about today is we're talking about the criteria from what the holding's going to be when a new signal comes on, right? So whether it's 17 out of 34, well, when it gets out and gets back in, it regenerates another map. And it tells you everything that's likely to happen on a brand new trade. So it's literally regenerating the entire thing.
Bob, I just want to say that I've made a lot of money off your daily S&P charts, the support resistance in the last 3 weeks, and thank you for that.
Yeah, you're welcome. It's yeah, those things today was insane. if you caught that short today. You know, one of the things I'm trying to get to, folks, is for one reason or another, I'm just trying to see where the chat is. I can't find the chat in Zoom. It's been reduced or something's happened. I'm not sure what's going on there. I'm just trying to find. I hear people asking questions and I can't seem to find them. Let me see something. I found a page. Shows me participants, but not what I need to see. Okay. All right, folks. Let's call it quits. I think it was a good session. I hope this was helpful for all of you. Like I said, I think we're gonna do these every week. We've got a lot of folks coming on. There's a lot to talk about, to understand, and to get oriented in how to use these models. And especially on a short-term basis, there's a lot of noise on some of the short-term models. You do have to be somewhat careful, and you want to make sure that you're buying into trades that are in position to, you know, like they're in patterns or in low patterns, and they look like a reasonable place. Sometimes you get some signal, especially on the short-term stuff, that might be somewhat erratic, and that'll be, I think, a whole could be done just talking about that event in itself and looking at positioning. If you see a stock that's run up, I will caution you on this. You see a stock that's run up on a daily, or it just went crazy and ran up, all of a sudden the models want to buy it. Don't buy it. It's probably a bad idea. But especially, and the other thing, we've had folks over the years, you got to watch out. If the stock has run up a lot, go look at the news on that thing. There's probably some corporate news, especially if it was a spike, that there was a buyout or something happened that triggered that activity. So we had a guy once that bought a stock. It went from 25 to 50, doubled in price. He didn't even look at it. And then he buys it and it stays 50, 51, 49, 50. Like 3 months later, he calls in and says, "The stock's not going anywhere. I bought it, you know." And said, the first thing I did was look it up. Guess what? It was a buyout. It was a $50 or $52 buyout in the stock. So the system wasn't long. It popped up to 50 and it signaled a buy. So make sure you review these things. The other thing, to make sure if the data doesn't look right on a chart, there's a spike or something strange, also be very careful with those. If you see some weird data, verify that that's where the data's at, because we use the same data vendor as Yahoo Finance does, and so typically whatever mistakes on Yahoo, so is it on ours. We do a better job. Yahoo doesn't scrutinize their data at the same level that we do, and we peruse it and look at it. If you see weird data or anything, if you in that comments, you can do a bug report or something. You can tell us that you saw some strange data, and we're glad to go out and clean it up, see what we can do about it. So, great session, folks. We still got, I think there's quite a few hanging out. Yeah, there's still over 100 hanging out on YouTube. So YouTube folks, appreciate you coming in. And if you haven't subscribed to the software, sign up and get involved. And we're going to train everybody. This is going to happen ongoing.
Great. Thank you very much.
Thank you. Thank you, everyone.
Thank you, Bob.
Thank
We'll talk to you in a few
Thank you very
hours.
much. Very helpful.
Yeah,
Yeah.
thank you.
Very good.
I'm looking forward to this report tonight.
Yeah, me too.
Thanks, Bob. Very informative.
Thank
Bye.
you.
Bob,